Hey everyone, welcome back to my channel. Today we're going to talk about investing in the stock market, something that I know can seem super intimidating, especially if you're new to the world of finance. But I want to walk you through a simple, step-by-step process that can help you get started with investing, even if you're a complete beginner. Now, I want to share with you how you can potentially turn $1,000 into $5,000 in just 5 years, and I'm going to break it down into 5 simple steps. First, let's talk about why investing in the stock market is a good idea in the first place. Historically, the stock market has provided some of the highest returns compared to other types of investments, like bonds or savings accounts. Of course, there are risks involved, but with a solid understanding of the basics and a long-term perspective, you can set yourself up for success. Now I know what you're thinking. $1,000 might not seem like a lot of money, but trust me, it's a great starting point. And with the right strategy, it can add up over time. So let's get started with step 1, which is to open a brokerage account. This is essentially where you'll store your money and buy and sell stocks. There are many different brokerages out there, but some popular ones for beginners include Robinhood, Fidelity, and Vanguard. When choosing a brokerage, you'll want to consider things like fees, commissions, and the types of investments they offer. Now, I know some of you might be thinking, what about the fees? Won't they eat into my returns? And yes, fees are something you should definitely consider, but many brokerages, especially the ones I mentioned, offer low or even no-fee trading, which can be a great option for beginners. Step 2 is to learn about the different types of investments that are available to you. Now, I'm not going to get too technical here, but basically, you've got your stocks, your bonds, and your ETFs, or exchange-traded funds. Stocks are essentially pieces of companies, like Apple or Amazon, while bonds are more like loans that you make to companies or governments. ETFs, on the other hand, are like baskets that hold a bunch of different stocks or bonds, which can be a great way to diversify your portfolio. For beginners, I would recommend starting with ETFs, as they tend to be less volatile than individual stocks and can provide a more stable source of returns. Now let's move on to step 3, which is to set a budget and decide how much you want to invest. In this case, we're starting with $1,000, but the key is to be consistent and make regular investments over time. This is called dollar cost averaging, and it can be a great way to reduce your risk and avoid trying to time the market. So even if you can only afford to invest $50 or $100 per month, that's totally fine. Just make sure you're consistent and patient. Step 4 is to choose your investments. Now, this is where things can get a little tricky, but don't worry, I've got some tips to share with you. For beginners, I would recommend starting with a total stock market ETF, which essentially tracks the performance of the entire stock market. This can be a great way to get broad diversification and reduce your risk. Some popular options include the Vanguard Total Stock Market ETF or the Schwab US Broad Market ETF. Another option is to invest in a few individual stocks that you believe in, like companies that you use and love. Just remember, it's always a good idea to do your research and never invest more than you can afford to lose. Finally, step 5 is to be patient and let time do its thing. Now, this is probably the hardest part, especially if you're new to investing and you're eager to see returns. But the truth is, investing in the stock market is a long-term game, and it's not about getting rich quick. It's about consistently investing over time, riding out the ups and downs of the market, and giving your money the chance to grow. So even if the market goes down, which it will from time to time, just remember that it's all part of the process and stay focused on your long-term goals. Now let's talk about how you can potentially turn $1,000 into $5,000 in just 5 years. This is based on a 20% annual return, which is a pretty aggressive estimate, but it's not unheard of, especially if you're invested in the stock market. Of course, there are no guarantees, and the actual returns may vary, but the key is to be consistent, patient, and informed. So if you're starting with $1,000 and you're earning a 20% return per year, that's $200 in the first year, which brings your total to $1,200. In the second year, you'll earn another 20% on the new total, which is $240, bringing your total to $1,440. And so on until you reach the end of the 5-year period, at which point your $1,000 investment could be worth around $5,000. I want to emphasize that this is just an example, and actual results may vary. But the point is, with the right strategy and a long-term perspective, it's possible to achieve significant returns over time. And even if you don't quite reach the $5,000 mark, you'll still be building wealth and setting yourself up for financial freedom. So if you're new to investing, I hope this helps, and I encourage you to get started today. Remember, it's all about taking that first step, being consistent and staying patient. Thanks for watching, and I'll see you in the next video.